Hi, I'm Kelly Giff with Paysmart Payroll Services,
And I'm Sean Brubaker with Gift CPAs.
and we're here to present Work Opportunity Tax Credit, better known as WOTC.
So what is WOTC? WOTC is a federal tax credit available to employers who hire individuals from eligible target groups with significant barriers to employment.
Why WOTC? There's a potential for reduced tax liabilities. Employers hiring target groups may be eligible to reduce their federal income tax liability as much as $9,000. Employers make the hiring decisions. WOTC reduces an employer's cost of doing business while helping those in need find and retain good jobs. You get to make the decision on who you're hiring. Through many other state agencies, you have a list of people that you can hire from. In this scenario, you do the hiring. And then finally, the U.S. economy benefits. The success and growth of this income tax credit for private sector businesses is beneficial for all who participate while increasing America's economic growth and productivity.
So how does WOTC work? Any private sector business that hires a new employee from an eligible target group may apply for WOTC. In addition, the tax credit is available to certain tax-exempt organizations that hire new employees from the WOTC Veterans Target Group.
Who is eligible? Veterans, long-term or short-term temporary assistance for needy family recipients, Supplemental Nutrition Assistance Program recipients, or food stamps, designated community residents, vocational rehabilitation referrals, ex-felons, Supplemental Security Income recipients, summer youth employees. Both the designated community residents and summer youth employees must come from a KOZ zone. Who is not eligible? Relatives and dependents of the employer. Former employees, regardless of how long it has been since they last worked for the employer. So if you're just finding out about WOTC and you have recently hired an employee who would qualify, you cannot fire them and rehire them in order to get the credit. Lastly, majority owners of the business do not qualify.
How to calculate the tax credit? The requirements are as follows. Employees must work at least 120 hours in the first year of employment for the employer to qualify to claim the tax credit with the Internal Revenue Service. So if you have someone that you hire and they only work 100 hours and then they leave, they would not be eligible for the credit. After the employee has worked at least 120 hours, the employer may claim a tax credit equal to 25% of the new hire's first year of qualified wages. The maximum tax credit on first-year wages is between $750 and $6,000, depending on the eligible target group. After working at least 400 hours, the employer may claim a tax credit equal to 40% of the new hire's first year of wages. The maximum tax credit on first-year wages is between $1,200 and $9,600, depending on the eligible target group. This credit is a non-refundable credit, which means that if you have a $5,000 credit, but let's say you only have $2,500 of income tax, you would only be able to claim $2,500 of the credit. The other $2,500 you would be able to carry back 1 year or carry forward up to 20 years. Another note that this is a permanent tax credit. The credit has maximum amounts. Those amounts depend on the target groups. It also depends on the number of hours that they've worked. Like was stated before, if they work less than 120 hours, they will not be eligible for the credit. The credit ranges in value if they've worked between 120 to 400 hours, and then there is another range for the credit once they've worked at least 400 hours.
How do I apply? The application process involves 5 steps. Please note that prior to claiming the tax credit with the IRS, an employer must request and receive certification from the State Work Agency, SWA, stating that the new hire is a member of at least one of the WOTC target groups. Step 1. New hires must fill out IRS Form 8850, Pre-Screening Notice and Certification Request for the Work Opportunity Tax Credit, to pre-screen employees and make a written request to their SWA to certify the new hire as a member of the WOTC target group. In other words, as you hire employees, you must have them fill out the Form 8850. You cannot select one employee over another employee to fill out the form. All new hires must fill it out. If you choose one over the other, you'll have a discrimination issue. So make sure that everybody, even if they don't qualify, fills out Form 8850. Once you've determined that the 8850, that the person may be part of a target group, you as in the employer fill out the Form 9061. Form 9061 is a list of the documentation and additional information required to get the determination letter. Both of these forms must be submitted to your state work agency within 28 days of the start date of the employee. If it is not within 28 days, don't bother doing it. They won't give you any credit. It is very important that both of these forms be sent to the state workforce agency by the 28th day after hire. Step 4, the state workforce agency will send you a determination letter. This can take up to a year, sometimes even longer depending on the state. Once you've received the determination letter, you can then move forward with claiming the tax credits. The state agency may come back to you during that time period before giving you a final determination requesting more information. Please be aware that you need to provide that information before you get that credit, and the final determination letter is what you need before you can apply for the credit.
The last step is filing for the credit with the IRS. After receiving certification from the SWA, employers may file for the tax credit with the IRS. Generally, an employer elects to take the credit by filing IRS Form 5884, Work Opportunity Tax Credit. However, a tax-exempt organization that hires an employee in the WOTC Veteran Target Group should use IRS Form 5884-C, Work Opportunity Credit for Qualified Tax-Exempt Organizations hiring qualified veterans. The Form 5884 is the Work Opportunity Credit form. So on this form, what the business will need to do is fill out the wages, the first year wages for the qualified employees who have worked at least 120 hours but fewer than 400 hours. Those wages are times by a 25% credit. You also are able to take the wages of the first year applicants or the first year employees who worked for at least 400 hours. Those wages are times by a 40% tax credit. Lastly, if you have any qualified second year wages of employees certified as long-term family assistant recipients, those wages are times by a 50% tax credit. Once you have figured out the total amount of the tax credit, that flows through to the Form K-1 if you are an S corporation. So on the Form K-1, it would be shown in box 13 with a code of J. The total amount of the tax credits would be shown here. That number would then flow through to your personal tax return on the Form 3800. On the Form 3800, it would show up on line Form B, which denotes the Form 5884. On this, it will show the EIN number of the entity that it is coming from, and it will show the total amount of the credit. From there, that credit flows through to the back of your Form 1040. There it will show up on line 54, other credits from Form 3800. The total amount of the credit will be shown on line 54. As long as you owe more tax than there is credit, you will get the full amount of the credit. If you owe less tax than the full amount of the credit, the part that was not able to be used will carry forward for up to 20 years, or you can elect to carry it back for 1 year. So you want to make sure that you're maintaining the proper records. You'll want to keep copies of the IRS Form 8850, any transmittal letters that you submit to the SWA, proof of mailing or other manner of submission, and certifications you receive from the SWA as long as they may be needed for the administration of the provisions relating to the WOTC. Records that support the credit usually must be kept for 3 years from the date when any income tax return claiming the credit is due or filed, whichever. So, for us at Gift CPAs to be able to do this credit for you, we'll need a report of the eligible wages and the eligible hours that the employee worked. a good way to do this is to contact Paysmart.
And Paysmart, we can provide the payroll hours. You'll have to have the forms filled out in advance when you hire the employee. We can make that really easy with our Flight software. So if you want to learn more about Flight, please contact us at 717-766-1777, and we can set you up with a Flight demo.
If you have any questions in regards to the credit itself and how it may help you on your personal taxes, please give us a call at Gift CPAs at 717-766-3555. Thank you.